Friday morning, we took out the recent low, went down almost to 262, had a really hard reversal. Failed to break the downtrend though for the past week. We had 6 days in a row of lower highs. Today with this morning's gap up, we look to break that streak. We're gapping above Friday's high right now, which is here. What I would like to see as a sign of that pattern breaking would be if we pull back from this pre-market high, is a move into the 268 area and kind of a support in here. We did see signs at the end of the day, even though we melted around 2 o'clock really hard. Buyers were stepping in pretty aggressively towards the end, and then even in the after hours, they walked the SPYs up about $1 to here. So certainly good signs of a short-term bottom, not necessarily the bottom for the year. But after a bunch of up days in a row, I shouldn't say a bunch, a few up days in a row here, over a week of down, people probably thinking we could have a bounce now, maybe up to like in this area here. And we see if we can start to put in a few up days again. I think the 276 would be pretty good this week. $14 off the low. Right now we're exactly $7 off of Friday morning's low, which we put in around 10:30. But this is my area I'm looking at buying and pullback, mid 268s to mid 267s. A quick flush on the open to here, and then a move back above 268.50. Watch to see if they test the pre-market high or even push into 270. Best case scenario, Thursday's high was 271.50-ish right in here. We're already up, what are we up now? $4, $3 from the after hours. Yeah, I could see us popping another $2 from here. That would be about the same size of up as it was down on Friday morning. So that's best case scenario, I like to hear. Worst case scenario is probably to here. All right. Qs. So Qs had a really strong bounce off the 64 Friday morning. It went from that was our S1 and went to our R2 before reversing. S1, this is R1, right? R2. So let's bring this. Use 170 this morning on the Qs. 168. Potential higher low here. I mean, same thing. It was six lower highs on the Qs, same as the SPYs. Friday's high is right here into 170. That's where we are right now. When we turned there, we turned pretty hard. We came right back down to where the final up leg started intraday, 167.50. Technology rolls over today. This is going to be the spot to look to see if buyers step in right here. unless they're really aggressive and they step in at 169. All right, so IBM bought Red Hat cash, or offered to acquire them for cash. This is probably the worst run technology market type leader we've seen in the last decade. As all the technology stocks have made new highs the last year or so, IBM has been in a downtrend for a few years. And so they've been buying stock back hand over fist, and the price just keeps on trending lower. We looked at this the other day, gap down on earnings. The market doesn't like the deal. Even though they're doing it with cash, not even with stock, they still don't like the deal. Seems like a better use of their cash than buying their stock back, though. So if we look at the support, I had 118. Is that the recent low? Let's see here. So we've got to go back to 2016. Almost 3 years ago. I guess it was gapping that at 118. It's tempting. I mean, it's tempting to say, hey, people are going to look to trade this as a balance. I mean, it was the beginning of October, it was 155. So now it's 120. It's actually 119. 35. So we're down over 20% this month. Took out the low from this year by a bunch, $20 below that. And they did bounce it a little bit. I mean, it went from the 118 to 122. It's about an ETR. I think I put on the sheet use 120 as inflection. So I guess the way I look at it is the market doesn't like desperation, and that's why it's getting hammered. But at the same time, it is down 20% from the month. And so it's okay to look for a bounce here. Just the way, from a technical perspective, is you want to see it holding above 120. I think if you see it holding above 120, then you make a play to the pre-market high, and you kind of see what happens. Maybe it does bounce to, what do we have on the sheet? 124, 125 resistance. If it's holding below 120, it's 118, and then I put kind of 115 as not quite another ATR to the downside, but almost another ATR. So that is that. It's a liquid stock. It does have a tendency to spike up and down on the open like many stocks do, or setting in a trend for the day. So I'm going to trade off the prices I just discussed. The next one is TSEM, which lowered guidance. This is a stock that's already beaten down like the rest of the semiconductors are. So more than 50% from the high. I think I actually calculated if it gets to the 1430s, that'll be 60% from this year's high. Basically, we see that the uptrend started, it really started from here. It's into this gap now. It's offered below 15. So this was the beginning of it right here 2 years ago, a little bit over 2 years ago, when it gapped up to 14. And then it consolidated and then trended. So that's been erased. Down 50% was here, down 60% is here. Just like some of these other ones, we've looked for bottoms like MU and EMAT. It's this one, it makes sense to look for a bottom today in it. So it normally trades 500,000 shares. Just going to see when it's in play. Could easily do, first of all, when it gapped down this summer, it did 4 million shares. So somewhere between 2.5 and 5 million shares. Yep, that's what I said. So it's had trouble in the pre-market holding about 15. So So I've already got a script in to buy a flush on the open and get long. Then what I would want to see is it start to hold above $15. There really is nothing in terms of resistance until up here. And it's gapping down to a new low. So that is that. DRNA, drug deal with Eli Lilly. They got a $100 million equity investment. The market cap on this is lower than $1 billion, so it's a pretty significant investment. One thing that I don't like about it, it's big news, so I put it on here, but I just don't like the way the daily chart looks. It's just not clean. I mean, it's in an uptrend. It just broke that uptrend recently, but this channel is pretty wide. Just erratic the way that it moves here. But I do think there is potentially an opportunity that they sell on this news as it's at the top of the channel. So I thought it was worth putting in here. Similar prices actually to, similar resistance levels to the last stock we just talked about, and normally trades about 500,000 shares a day. So yeah, we're gonna have to wait for this to open to see what it's gonna do. It's only done 13,000 shares in the pre-market. If it pops on the open to the 17 area and you see some selling, it's a good risk to reward on the short side. After 10 a.m., if it's still, let's say, holding above 16, I think that'd be pretty bullish. Sometimes you get these gap up here. If they start selling right on the open, they erase most of the move. Let's come back on that. Just want to see, well, it already had sold off recently, so 1350. Okay, 15. So it actually was up at $16 at the beginning of the month. And this was very good news, so we kind of expected to hold this area right here, at least for people to step in right here. It's a thinner name. All right, VXX. So VXX, despite the market getting obliterated Friday morning, never got out of control to the upside. I mean, it did get up to 41.5, but never got to 42, 42.50, which I thought was kind of more the amount of weakness we were seeing in the market. That would have been a more reasonable spot to get shorted. Came off pretty hard to 39. It's gapping below there. This is kind of the moment of truth for it to see if the uptrend from the last couple of weeks fails. I think 39 is the spot to look at it. Right on the open, if the market starts to sell off. If the market's selling off pretty hard and it's having trouble really getting much above 39, that's a strong sign of the beginning of a larger down move. If the market really gets obliterated, comes off 2.5, $3 on the open, closer to 40. We'd be looking at for an entry. Intel reported really good numbers last week. At the end of last week, this was a reaction to 47 with the market gapping down Friday morning. It was at this 44 support. By the time the market opened, it was back at 46. The market sell-off put in a higher low. You kind of see we had this range to take a look at it. It very quickly came inside of it, but caught a bid. Didn't really do much the rest of the day. It's gapping up with the market. Maybe a hard stock to really trade actively. But I would say if they flushed it into like 45, 60s on the open today, this would be a spot that I'd be looking to pick some up, risk 20 cents. See if this can work its way back up to 47.30, 47.5. That's why I kind of like it in the flush to here. It's about $2 of upside. TXN. So this one's bouncing a little bit in the pre-market. Don't remember the prices we had on it on Friday, but the low was right on the open. Strong move up into prior day support. Actually took that out into the close, so it makes it a little bit tough, but this 91 is an interesting level for potential support now for me over the next couple of days. Let's see if it can kind of work its way back up to 94. Tesla. So Tesla's a long. It's really a question of, how do you find your way into it if you haven't gotten in yet? So it had the ridiculously good numbers. It was gapping above 300. In the after hours, it was up in the 320s. They flushed it down to the prior day's kind of morning high. It held twice. It's pretty clean. The next morning with the gap down in the market, it was right at after the prior day's afternoon support, but never took that out. In the afternoon, there was a Wall Street Journal story, which was complete bullshit, but it did drop about $15 on that. I don't have time to explain why it was bullshit. Just take my word for it. And it's in an uptrend from there. Looking at it today, it's had some really good flushes. So I want to say 330 to 332 right here. If they're gonna aggressively buy it today, 335 would be holding this uptrend even more aggressively. I think from a bigger picture perspective, if you're thinking like in the last couple of months of the year, it's reasonable to assume that it's going to try to test the all-time high, which it put in summer of 2017, did a retest the fall of last year, did a retest again recently. So it's like high 370s to mid 380s. So over the next couple of months, I think 360 is what people are first thinking about. And then like here. And it's basically just finding spots to get involved to capture kind of the moves back up to here. 360 is like, I think, pretty much a given at this point this year, maybe this week. The question is it going to test this all-time high and take it out and make a move in the 400s? Really is just a question of how much damage must get to the psychology of the stock. It's starting to shake it off already. JD. So this is a very beaten down Chinese name that has the potential when China turns around to go to the high 20s pretty quickly. So we want to check back in with it. So the low right now is 2170. Let's say 30% off the low. Puts it right back up into here, or a little bit higher, like around 28. 20% off the low puts it back up into here, assuming that the low is in for it. In best case, let's say over the next 3 to 6 months, would be back into here, 50% off the low. And so last week, put in the low, we tested it on Friday. Now it's coming up to here. You want to see it start to hold above 23. When things get beaten down this much and they start to turn, it's just, they can move large percentages like really quickly, 20% like in a couple of days. So, CGC. So CGC was interesting in that it actually, since they got the investment, the large investment back here, Actually tested that support, which was pretty amazing, I thought. So, but certainly between 37 and 38, I think this is a buy longer term. It's where they got the investment from a big beverage company, which for some reason I always have a mental block in the ticker. But 37.50 is the price. It touched it like basically 4 days in a row, and held. If it breaks to the downside, probably could come off a couple of dollars from there. If it actually starts to hold above $40, people will look for the bounce. Broke down from pretty quickly from the mid 40s and hasn't been able to get back above 42.50. And then IWM. So IWM definitely is beaten down the most. 145 is a low Friday. If we're looking from a bigger picture head and shoulders, reverse head and shoulders standpoint, something like this. It's gapping above there right now. So I definitely wouldn't want to be long it up here. If it has some closes back above 150 and kind of can consolidate a little bit above where the last down move started from, that would be interesting. We know that when it does turn, it can go very quickly, but has definitely led to the downside in the market. So you want to be a little bit more careful on this one, or a lot more careful than on the Qs than the SPYs. But certainly if they flush it down here into the high 146s, low 147s, right in this area. Let's see, 146.5 to 147, let's call it. This would be interesting to me right here. And then it would need to close above 147.5. And you play it for a move back up to here and then kind of see. So Friday was a pretty wild day. I think we had, potentially a $5, $6 range we were talking about on the SPYs. It did that real quickly on that bounce from the late morning to the early afternoon. The size of this rollover, I think, caught everyone by surprise. I think, I was thinking we could come off a couple of dollars, maybe test the 66, which we did, and people stepped in there. You can see the first time we touched it, we came right back to 67.5. But then very quickly came off almost $4, I think, here. This was extremely vicious. So just a reminder that you still can have these quick $2, $3 moves. The spot to look for them usually is on an overextension. So for example, the overextension on the downside was when we came off $2 from the overnight lows right on the open. That was the overextension. A snapback to 265 is a reasonable thing to look for. And then after that, obviously, it just kept on going, another ATR. And then on the vice versa, if you're looking for, a down move, when it gets back above 68, $6 from the low, that's an extended move to the upside. So $5, $6 on the upside, generally $8 on the downside on the big days, and then also a $2 to $3 flush through a pre-market low is, I look for a reversal and then a move at least back up to the pre-market low and kind of see if it can pop through there. In this case, it did. It failed initially, and then had another full ATR move. So unless you have the large overextension to the upside or the downside, you really are looking for, to capture 50 cent to dollar moves quickly on those in-between prices. And when you do capture an ATR plus move, you want to think about hedging off risk, buying cheap options in the opposite direction that you just went. So for example, when you go from 62.5 to 68, maybe the 65 puts you really cheap at that point. Buy some if you're still holding some long, even if you're down to 30% of your long position. And then vice versa, when you come down here, you capture the short, you're at 80%. And at this point, I think you should have been looking to actually flip the long, but let's say you were holding some short, buy some of the 66 calls are really cheap at that point. They're probably 25 cents or something. That way, if you have a hard reversal, you can capture that. So by buying cheap out of the money puts or calls after an ETR plus move intraday on the SPYs is, it's been worth it if the pricing is good. All right, we got probably a very busy week in front of us. It's going to be very busy on earnings again.